भारत माता की welcome again, friends. And you all know this is the first session of my tenure. Friends, today's topic is not just timely but also extremely relevant for all of us. As you all are aware, the ICI has introduced revised reporting formats and accounting guidelines for non-corporate entities. These moves ensure us for more uniformity, improved disclosure, and better compliance across the board, even for the entities that are not companies under the company. To guide us through this topic today, we are truly honored to have with us a highly respected and experienced professional, CA Prashant Dastariji, who is very known in the topic for his deep understanding of accounting, audit, and regulatory matters. Friends, इनके लिए तो मैं सिर्फ इतना ही कहना चाहूंगा कि ज्ञान की रोशनी से जो करे हर संशय दूर, ज्ञान की रोशनी से जो करे हर संशय दूर, शब्दों में हो सादगी जिनकी, बातों में हो नूर, ऐसे विद्वान का दिल से स्वागत है आज, जो करे जटिल विषयों को भी सरल और मजबूत। In this words, may I request a visual model to give a brief introduction of our speaker.
Good morning, friends. Good morning. It's my indeed pleasure to introduce Mr. Prashant Daftariji. He is a partner in NA Shah Associates LLP, and it is nearly about 25 years of experience in the audit and assurance, starting as an articleship in back 2001 The Prashant ji has dedicated the passion towards his work, and it is been seen that it has been evaluated to the partners that Prashant ji has been involved in a cross session of the client in diverse sections to help them to bring a systematic, disciplined approach to the audit and ensure a value addition to his clients. His areas of expertise includes statutory audit, internal audit, management audit, internal financial control, risk assessment, process review, and SOP drafting and due diligence. He has made the number of presentations on internal audit, India's AS, accounting standard, internal financial control, and various other topics related to accounting and auditing at WIRC, TCT, and study circles. Prasanji has also an internal audit expert and has contributed a significant in sharpening the firm's internal audit practice. Prasanji has contributed a convener for the account and the audit committee of Chamber of Tax Consultants. He was also the part of the training committee of IIA Mumbai chapter for financial year 2024-25. He has a bachelor degree in the commerce from Mumbai University and qualified as a chartered accountant in 2004. So on behalf of JB Nagar Study Circle, I welcome Mr. Prasanji. And for the memento purpose, I request Mr. Mahesh ji and Chintan ji to give the memento, please.
ये चल रहा है इससे ये बटन ये नहीं चल रहा चलेगा Hi, good morning. Sunday morning, this topic on non-corporate entities, I think as Kanhaiya ji rightly said, it is relevant and very timely because for first 424, the accounts have to be now prepared under the new format, and hence this becomes very, very relevant. The ICAI has come out with a guidance note. It supersedes the earlier technical guide, and that is why this topic becomes more relevant. Though we are all used to this format, which has been there in the guidance note, it is similar to the companies. And obviously, when it is similar to the companies, the work, time, effort will significantly increase because the non-corporate entities have their own challenges in terms of preparation, in terms of the infrastructure, in terms of ability to prepare the data, ability to have those information ready. And those challenges we will try to see, plus the applicability of accounting standard. There also, there has been a lot of yo-yo or in terms of a lot of things which are happening. Guidance note started with level 1, 2, 3, 4, then institute notification saying MSME, non-MSME. So there seems to be some confusion around that also. And some significant changes are also there when the MSME, non-MSME happened and the relaxations which are given, which are available. So I think it is very important to understand what relaxations are available, what are the do's and what are the don'ts. There are some significant things which are there also, and we will try to go through that during this journey. If we can have more practical questions, it will be interesting. Otherwise, accounts auditing tends to become very dry. Sunday morning, we cannot have very dry topics. It will become very difficult. So if there are practical and challenging things which everybody of you all, more than me, I think the people who are sitting here, you all would have faced more questions where difficult answers are there or the answers are not readily available. I think if there are some deliberation on those type of things, it becomes very interesting. So we will start with the presentation. Moving on. Yeah. कौन सा ये दो बटन आगे pointer है. Yeah, I think we have the technology in place back. So we'll start. So this is something what we will try to cover today in terms of the background, format, applicability of accounting standards, relaxations which are there. We will have some slides on cash base of accounting because it's another huge challenging area. Cash base accounting, there is a lot of questions which are there when you do cash base of accounting, and a lot of non-corporates still follow cash base of accounting. So we have 3-4 slides. The technical guide, which is issued by the Institute on cash base of accounting, though we will have to touch upon that as well because non-corporate entities you cannot have without cash base of accounting. Some common issues which are there when we do the audit of non-corporate entities, when you try to finalize the books. So some of the challenges which are there, and if people can contribute to those points which I have mentioned, it will be great. Recent development with respect to LLPs because government wants to make accounting standards mandatory, auditing standards mandatory for LLP as well. So this is a significant development. NAFRA has issued some standards and recommended to governments. IC has also issued an exposure draft on this matter. So there is a lot of development which is happening on this area. The conclusion, Q&A, and the other part. Obviously, LLP, though they are not really non-corporate because they are forming part of the body corporates, but it is important to touch upon some of the LLPs which are there. Obviously, there are more companies as compared to LLPs, but they are also growing in size. So when you look at non-corporate partnerships, LLPs, they are also similar families, but we can be relevant. But plus the section on LLPs, there are other things, partnership firms, AOPs, HUF, trust. Trust also becomes very significant because obviously Bombay Charitable Trust will have their own format and other things. To that extent, these formats may not apply, but there are private trust. And in today's time, a lot of private trusts are becoming very large. It could be family trust where there could be large investments, and those are the areas where it becomes very large. So some of the facts and myths about non-corporates and LLPs. Obviously, some of the fact is they are less regulated. This is a reality, and it ought to be that way because as compared to companies, they are less regulated. And the intent also of the legislature was that it is faster, easier to do business and have lesser regulations. There are no standard formats which are there for LLPs, non-corporate, prior to the introduction of the guidance note. And that is why this guidance note, because there were very, very different practices which were there. So for example, if you look at any balance sheet which is there of a partnership firm, there could be cases where previous year figures are not given, or there could be cases where it is in a T format. There could be cases in which the current, non-current, some cases it was used, some cases it was not used, depending on the practitioner, depending on the firm, depending on the company, what they want to do. So too many different practices were there, and there was lack of consistency amongst the way the accounts were presented. Now the question is, because there is nothing in law for you to make it mandatory, because LLP Act does not prescribe any, it does not prescribe any format similar to Companies Act. Companies Act has Schedule 3, but there is nothing in LLP Act. Partnership Act also does not have a format, mandatory format, and hence there were different views which were technically possible and which were being taken across the country. Always there is one question, I am having a partnership firm or I am doing a sole proprietary business. Is accounting standard applicable to me? That is generally a question which is always there. So we will deal with that question also. Obviously, accounting standard are applicable to you as a member. There is no doubt about that. Even if you are doing a tax audit, Form 3CB says first we have audited the balance sheet and profit and loss account. So when you are doing an audit, how do you do without compliance of accounting standards? And hence accounting standards are applicable. Now, once accounting standards are applicable, most of the LLPs, partnership firms or sole proprietor, the depreciation schedule, you will see it is done based on income tax method, because that is the most relevant thing. Because you feel accounts are prepared only for income tax purpose, we do only income tax depreciation. But then it becomes non-compliance with accounting standard. AS10 does not require you to follow that method. AS10 is a completely different method. The format, gross block, net block, WDB, everything is different. The depreciation calculation is different. But that is a common inconsistency that you see. Those are the challenges, or those are the inconsistencies which are getting addressed by this time. One of the thing which we is there that in case of LLP or partnership firms, we say that audit is not mandatory because tax audit is not there. But it is quite possible that your partnership deed may say audit is mandatory under the partnership deed. It may be written. Or in case of a trust, it may be written that the audit of the accounts are mandatory. The trust deed may have that clause. So in a way, then it becomes mandatory because it is part of the governing document or the governing structure of that entity. So before you come to a conclusion, audit is mandatory or not mandatory, some of these aspects have to be taken into account. Partnership, LLP, non-corporate entities, this is just a general overview. In terms of the governing body is the LLP Act. For LLPs. Partnerships, you have Partnership Act, or various trusts will have different acts, Bombay Charitable Trust Act and other type of things which are there. There are different laws which are governed. The format which is prescribed by the institute does not apply in cases where the format is prescribed under law. So for example, if the Bombay Charitable Trust has prescribed a format in their law, you will have to follow that format and not this format. Though the applicability of the accounting standards will go based on the criteria and the classification. But from the format point of view, you have to be clear that this format is applicable. Generally, this is the rule, but in case law gives another format, law will prevail. So proprietorship firms also, many times we are doing tax audit for a proprietary business. In that case also, these type of formats which are there, these disclosures which are required will apply. And depending on accounting standard will depend on whether it is MSME, non-MSME, but the format which ICI is prescribed, that will be applicable across the board. And hence this brings about new challenges in terms of preparation, because most of the proprietary and non-corporate audits happen during the month of August and September. This is the practical ground reality. Now, in August and September, if you are thinking that you will be able to prepare and accumulate and gather all these details, it will not be possible, because it's a substantial change as far as a small entity is concerned. And hence we will have to have a format which is there and give it to our clients. This is the format, this is the template, and we have to fill in this data. Unless that type of a preparation work is done, September month could become chaotic and it will lead to large scale non-compliances. And with the regulators now becoming more and more active, uh, this could slowly and steadily start causing problems. Even in case of a peer review, all these questions may come about. And hence it becomes relevant that we prepare well in advance. In April, May is the right time for preparing some of these things. Otherwise, September will become very, very chaotic. The key reasons why this change has happened, and partly it was covered in the introductory speech also. Uh, there was no consistency. There was no common format which was there. Everybody was having different practices. The disclosures were inadequate. So, for example, if a loan is taken by an LLP, whether it is mandatory to give the nature of security, ideally as a good practice, ideally it should have always been given. There would have been some guidance by institute somewhere that it should have been given, but there were different positions were taken, or contingent liabilities disclosure, or related party transaction disclosures. Or some in some cases, I have seen previous year figures were also not been given because the position was taken that it is not mandatory. Whether right, wrong, I am not getting into that part of it, but those type of positions were being taken. Comparability was becoming very, very difficult. So what was there last year? What is there current year? Whether trend analysis from a banking point of view also. So your banking point of view becomes very important. For LLPs, investors are also looking at it. For example, in real estate sector, you may have large LLPs because large projects may have been undertaken through LLPs, where the listed company may become a partner in an LLP, or a large private limited company may be a partner in that SPV, and those becomes very, very large. Uh, you may have accounts of some of the trusts which are now getting listed. InvITs, RVITs, all those trusts are also getting listed. So those also become very relevant, though there the listing obligation, other things will are also there. I'm not saying that, but from the point of view, it is not very, very small, but some of these things are becoming very critical and large. So this is something we did speak about. Uniformity and investor confidence is very important. Some of the cases where investors are looking to invest in LLPs also, or there is a joint venture between two large individuals and you are executing large projects. In those cases also, all the accounting clarity, disclosures, and all those things become very, very important. They may be JVs whose accounts may get consolidated also somewhere else, and hence more care is to be taken. The guidance note issued by ICA. ICA has also issued an Excel template where the format is given. So that is something which is very, very important, which can be used. There is a link which is given, Excel template is given for LLPs as well separately, for non-corporate separately. So that is another very, very important, good initiative which has been taken by the ICI. And this is something which we should use. These are standard templates, standard formats. Please make use of these formats rather than recreating the journey. And this will help and make life a lot simpler. Always there is a question, non-corporate entity, client will say it is not mandatory to me because it is not prescribed under any law. But as a member of the institute, when there is a guidance, the guidance does apply to you. And hence it becomes in a way mandatory to comply with this because the guidance note is mandatory on its members. But there is no law which will say that client also needs to mandatorily follow, but indirectly this becomes mandatory because you cannot sign unless and until you have complied with this guidance note. Hence, in a way, it is mandatory for the members, and hence the relevance of the topic that much more.
Mandatory now. Why is this complication in last line?
Mandatory is there for members, but there is no law for a sole proprietorship. From where is there a law for the entity? There is no law, no. Even your LLP Act does not prescribe any format today. That these accounts have to be prepared only in this format, if I am not wrong. The partnership deed also does not have a format. There is no law that you can only prepare in this format. And hence this question also does come about, that what is mandatory and what is not mandatory. But as a member, it is mandatory to you because the guidance note is issued by the institute of which you are a member.
Audited balance, it will be calculated in a fund. Yeah.
Unaudited is unaudited. Yes, unaudited can continue in any format, no? But once you have to put an audit to it, then it becomes very difficult. Especially now the tax audit thing. When you do 3CB, you are auditing the account. So you'll have to ensure that those things come in the format. And hence the challenge. LLP Act does say audit is mandatory, but it does not give any format. It does not have a schedule 3 in the act itself.
So in case the member has to sign the accounts, certify the accounts, then the format needs to be changed,
It has to be as per this guidance note format.
even though it is not.
Because for you it is mandatory. So there the choice is not there. Hence this is very important that we ensure and we educate that the accounts will always be in this format. You may have to send out emails to your client saying this is the new format in which the accounts have to be there. So even if there is a junior accountant in the client, he will start putting data of previous year figure in that number, in that format. Otherwise, practically it will be very difficult to implement because you need previous year figure also. So it is not. So you imagine if you are transiting and if you have never followed this format earlier, it is a 2 years work that you have to do today because you will need previous year figures also. So previous year disclosure also will be required for whatever items you are not giving those disclosure in the earlier year. So it is 2 years work which has to be done, and hence the awareness needs to be there greater. You need to spread this awareness, inform people in advance. That is the only way you can do it in a better way. So financial statements have also been defined in the guidance note. So earlier there was no definition of what is a financial statement for a non-corporate, but now the definition is also there. So typically you need to have a balance sheet, you need to have a statement of profit and loss account. The terminologies are also very important. You look at those terminologies also. That also make a little bit of a difference from the professionalism, from the way the things are looked at. It is not profit and loss account, it is statement of profit and loss. A very small change, very subtle change, but when you are saying that we are chartered accountants, we are aware, we are educated, it's a role model type of a thing, those small things become very important. Cash flow statement wherever applicable. So generally we prepare accounts of non-corporate entities, cash flow statement is never there. Wherever applicable, cash flow statement is part of financial statement. And then there are notes. Notes is one area where at least I have seen it is just 1-pager note or 2 pages note in a non-corporate entity. Now, if you see the requirements which have been brought about, it is very similar to company. They have brought it as close as to corporate as possible. So there are as many disclosures which are there for companies. 80 to 90% of them have been made applicable to non-corporate entities as well. So it's a long list of disclosures which is there. And hence, again, I am repeating that you will have to standardize the format and get the team working on that so that things can get completed. So this is the format which is there for non-corporate entities. So you start with owners, funds, and liabilities. In companies, the terminology is slightly different. They have changed the terminology. So owners, funds, and liabilities. Then you have your partner's capital account, partner's current account. Current account is part of the owner's fund. Because there were also many times where debit balance or credit balance in current account was either shown as current asset or current liability and was not part of capital account. In many cases, this presentation I have also seen practically. I am not sure how many of you all have seen, but on current account of partners capital, there were a lot of inconsistencies in presentation. People used to take different positions, whether it is part of the net worth, not part of the net worth. Because when you give the solvency certificate, even in LLP, how do you calculate that? How do you give? Because there may be debit balance in the partner's current account and you are giving a solvency certificate. So do you take a back-to-back representation from what whether the partners will going to pay money back to the firm and you have some documentation to say that the money will come back, because otherwise there is a debit balance and it could be a negative net worth. of an LLP, if there is a withdrawal by the partners in excess of what they are entitled to or their drawings are greater, which is there in many cases, practically. Loan is different, but now whether you are saying it is a current account transaction or it is a separate loan, that will be a different, whether it is, if it is a loan given separately, yes. But whether you have distinguished that way or you have not distinguished that way becomes very important. In terms of the minutes of the meetings of the partners and other things, how are you distinguishing between a normal loan and a withdrawal? So because there is going to be a very thin line of difference practically, whether it is a debit balance or it is a loan. Are you going to charge interest? Are you not charging the interest on that? Are some terms fixed that this is a temporary loan given to a partner for some emergency? He has taken a loan. It is not a withdrawal. Then it becomes a loan. So that type of a care will also have to be taken. Partnership firms and other things, there are no filings, but especially when it comes to LLP, when there are solvency certificates getting filed, we are not paying enough attention to that, some of these aspects when solvency certificates are getting filed. The objective of a solvency is that it has to be a going concern, it is solvent, it is not going to be insolvent in next 12 months, and all those things is the spirit of it. But if there is a debit balance in partner's account, you have to be careful. You have to have a proper documentation to say that I am filing a solvency certificate. Reserve and surplus is a separate schedule. Yeah. So unaudited, he also did ask if it is unaudited, then you are not responsible for it, right? So there is no problem, no? Because there is no law which says that it has to be only in this format. So for example, sole proprietorship, there is no law which is applicable to saying how a format of the balance sheet should be there for a sole proprietor, like Schedule 3 of Companies Act. There is no such law. So if you are giving unaudited is a different thing. But the day you say it is audited, then you have to bring everything in this structure. So even for a banking purpose, if you are signing, if you are certifying it, then it has to be in this format. For bank loans, for any other purposes, then everything of this will apply. 1st April 24. True, this is for financial year 24-25. Yeah.
The surplus is separate. That means I can credit profit share to capital, partner capital, or
that partners will decide. So, for example, if the firm makes a profit of 1 crore, the firm can decide that I will park 50 lakh as reserve and not distribute it to my partners. So that partners cannot withdraw that money. So that is a decision which partners will take. It is not mandatory that whatever profit firms earn has to compulsorily be distributed to partners. Once it is credited to partners, partners are entitled to withdraw. But if you are not crediting to partners account, for example, firms feel that we made a profit of 1 crore, but we need to make further investment, and hence that money should stay in the firm. So that is part of the partnership deed or partnership, whatever you decide. But that is interest of the partners. That call will have to be taken by the partners. And there are many partnership firms where they do not distribute the entire profit. They want to keep the money in the firm for the business contingencies, business growth, other aspects also. So it is not necessary. That is why this line is there. Who? Then you cannot sign. No, distribution of profit. Once you credit it to, then the distribution will happen.
What we are doing, distributing, we are dividing it in capital account and crediting it to capital partner.
That is also correct.
So that can be done or it can be routed to reserve center.
Both ways is possible. Both ways is possible. That decision will have to be taken by the partners. Both is possible. So partners decide that I don't want to distribute it to the partners because there can be some contingency in future. There is some large capex we have planned. The business contingencies are there. So let the money be in the firm. We don't want to withdraw the money. That is also practically possible. Practically does happen. And
after the decision of withdrawal is taken, It has to be through that note code or directly through profit and loss statement.
Better practices to note 4 and then distribute, maybe a better practice. Maybe a better practice similar to companies where you're saying you make the profit because surplus in profit and loss account goes as a schedule in note 4 and from there you distribute. That may be a better presentation. So that is there. Then you have long-term borrowings, deferred tax liabilities. Deferred tax liabilities are one area where in non-corporate nobody creates deferred tax liability. It is never done. It is mandatory for no, but there are some exemptions which are there. For level 1, it is mandatory. Level so MSME, if you are an MSME, deferred tax is not mandatory. That exemption has been brought about. Earlier, there was no such exemption, but now that exemption is available. When you see the exemption of the accounting standard, that is one important change which has happened.
Wherever applicable, you should.
Wherever applicable, it will come. So level 1, if you are level 1, it is everything is applicable. So level 1 non-SME, everything is applicable. Everything.
NSSG is not.
For MSME, it is not applicable. Non-MSME, everything is applicable. Everything. No exemptions. So if you are 250 crore turnover plus, and if you are having an LLP, or that LLP is a subsidiary of a listed company, LLP is a subsidiary of a large company, and all those things are there, then you do not have any exemptions. Long-term borrowings, again, borrowings, current, non-current, long-term, short-term, all these activities will have to be done. Other long-term liabilities, whatever they are, so gratuity and all those areas could be there. Long-term provision. Short-term borrowings, another area where in non-corporate typically, if there is a credit card outstanding which is there, either it is a current liability or it is a loan. Or why not loan? Is it not a loan from bank? Why?
Due date is not there.
Huh? No, credit card has a due date, no? No, loan है ना लेकिन. Why not? Huh? So there also because so when you are giving that there are no bank borrowings, it's not a bank borrowing. It's not like a overdraft which is there. There are some similarities. Just think about it. I know it is a contagious question, but and lot of times because we may be giving some certifications, we may be giving lot of things where there could be credit card outstandings.
Credit liabilities, you don't be borrowing.
But loan is also a contract, no? Because if you default in credit card, what happens? Are you not a borrower? If you default on credit card, what happens? Is it not reported to say bill? From a bank point of view, what is it? Huh?
Direct borrowing by the party. What is happening is that person whose credit card is there is responsible to pay to the bank.
So there are two schools of thoughts here, but I just raised this question. But you have to something which is to be careful about because you may be giving certifications, you may be giving things which are there. So if you are saying there are no defaults in payments to bank and there are delays in payment to credit card, sometimes what will you do? Many cases, some certifications are also required by banks, some statements are required, some disclosures are required. All those cases for if you are applying for new loans and you have to give some certification which is required by the bank because today for anything and everything they need chartered accountant certificate. For anything and everything they come say chartered accountant certificate ले लो. अभी तो बता नहीं birth certificate में भी sign करने को बोलेंगे. Because some certificates which they are asking are absolutely unbelievable. So we have to be very careful when you are giving some of those certificates also, especially even in non-corporates. Because it becomes even more challenging because the records may not be there.
Credit card is a debatable issue.
I am saying it is debatable, but I have to raise the debate, no?
Since the issue having the credit limits.
That is why I raised this question because yes, there needs to be some thought about it. It may be a very small amount sometimes in the larger context, but still. Then it may become a short-term borrowing or current liability. It does not make a great difference, but from a disclosure point of view, if somebody is looking at it, there is a loan. So this is the new format. See, there are node numbers, so it becomes very systematic that you will have all these nodes, you will have all these schedules. Today there are so many non-corporate balance sheets where schedules are not there, breakup is not there, or in some cases even groupings are part of the schedule.
Node numbers or?
No, you can change node numbers, if items are not there, you can delete all these things, you can do, which is not there. But principally, you have to follow the structure similar to what you are doing in companies. You can delete. If both line is 0, you can delete. Yeah, that will change. That can change. There are still some people, even in companies, where you put nil both sides. That practice is there. If you do it, there is no harm. But if you delete, it becomes more readable, more easy, because how many zeros you will see? Yeah, it is generally done that the format is same, because article clerks who are doing it, they will use the same format here and every year, so that format does not get disturbed. Generally, that is why it is kept for proper copy pasting. चलता ही नहीं। ज्यादा चल गया। So now when you go to the statement of profit and loss account, this is the format which is there. Exceptional, extraordinary. I don't know why they are putting extraordinary, not relevant, but still. So revenue from operations and all these things. So even if you are following cash based of accounting, this structure has to be this only, to the extent applicable. Same as companies, no change, no change. So in a way, if you are aware about the company's accounting, then you know everything. But the problem is implementation. Problem is not awareness. We are aware about it. As chartered accountants, I think we are all aware about it. It is more from the implementation and educating the clients and just understanding the quantum of effort which is required to implement this. And possibly, obviously, because of this, there is a case where the fees have to go up. No, because this is a serious implementation from, if you are non-corporate, this is a serious challenge, because definitely the fees, time, cost will go up. So that is why the awareness is required from to the members, and from the members to the clients, because if as a fraternity everybody says that nahi abhi cost badhega, so obviously awareness badhega, and then everybody will be able to raise their fees. You may not be able to do that for the same fees last year, because you have 2 years work this year. And in most of the non-corporate, practically you will have very little support, and you will only be doing all this. So this is going to be the ground reality, and when this is the situation, you have to be aware and spread this awareness to your client, and then obviously see that whatever fee increase is possible, we should try and consider. It is very important. Obviously, there will be some value addition to the client as well. The accounts will look better if there is some value. Especially people who are in a growing business will value it to a certain extent.
Easier to get bank finance.
Obviously, it is better, no? You will have to put it in that way, you have to market it in a way that it is better, that from a bank finance point of view, from MIS point of view, from business point of view, you get some of the information which is compiled, readily available. Going forward, also some of the information will be available, which is because part of the accounts, if they are made well. And for a successful business, it is very important that the accounts are in order. So that is some of the most important starting point.
So last week they are deciding for my institute. They got the formula like it is can automatically comes here.
So that they have not given, but there is Excel template which is there, but that is very easy in today's world.
Just asking whether
That Excel template, I have not personally worked on that, but that it is automatic or not. But today, this templates, if you have the Excel from Excel into this, is a half-an-hour job, not more than half-an-hour job. If you are able to digitize this correctly, it is half-an-hour job.
Now, actual figures are to be given or thousands or
that rounding off is available. That rounding off possibility is also there. That is also, that guidance is given. You can round off. Yeah, in the guidance note they have given the rounding off. Yeah. But that is also not a big challenge because if you are having proper Excel templates with proper formulas, you will be able to do a lot of things quite fast. So that is very important to create that template with X.
So because can be given or what is the your view?
I think rounding off is the practice right now. That is everybody is rounding off. We will see that. I don't remember right now. So profit before partners remuneration, current tax, deferred tax, excess short, continuing operation, discontinued. So they have given the full format which is available to companies. So because they have gone based on level 1, continuing, discontinuing operation, all those things may not be applicable to the MSME part of it. Non-MSME, everything will be applicable. Partners remuneration, there is a separate line which is there. So profit before partners remuneration, there is a separate line. Then profit before tax. So this also gives understanding of the results before partners remuneration, after partners remuneration.
In case of proprietary, we will change the word.
Yeah, you will have to change that wording. Yes, yes.
So that is not-
Yes. So even in case of a trust and all those things, some of the wordings will change. You have to customize that. So even there are also some of the items you can bring in 1 or 2 line items. It is not that even in case of companies, we bring in 1 or 2 line items. For different industries, sometimes different line items are brought in, but the principally it has to be similar. This is the format which, because they are not given in the guidance note, but they said the movement of the capital account and the current account has to be given. So I have created one format. Yeah. Up to a year, then it will go through that reserve surplus schedule. This will go to the reserves from which partners. This is the format that you can have for partners contribution also, because that one schedule is also very important in terms of the partners contribution, in terms of the name of the partner, percentage, contribution, movement, what is the capital introduction, remuneration, interest. So previous year figure, huh? Yes, same. Movement has to be given. This is the format which we have created so that this can be all the information is available at one go. And then similarly for previous year figure also we will need this information. Yeah, withdrawal will include debits. Yeah, all debits, all withdrawals, drawings. Current account, same way. If you are maintaining to capital account, current account separately, then separately. Because a lot of partnership firms and LLPs, sometimes these schedules are not there. You just have partners capital account, current account, but what is the movement? That was not there, but now they have mandatorily prescribed it. You should have a movement of that figure in terms of proper disclosure. Debit? If your account debited to current account, yes. If you're debited to current account, yes. Yeah, उतना capital से adjust कर लेंगे. Sir, some of the guidelines. So rounding off is optional. That question was there. Rounding off, it is optional. So depend, it's your choice. Companies Act is mandatory. Here it is optional. So you will start with operating cycle because you have to do current, non-current. Operating cycle will be relevant. Most of the cases generally it is 12 months. But be careful if you are doing real estate projects, it will not be 12 months. Real estate project is never 12 months. It is more. It is generally 4 years, 5 years, 5 years to 7 years. The real estate project answer changes because operating cycle is different. And a lot of LLPs, partnership firms execute very, very large real estate projects. So it is not that these are only small accounts. I have seen very large numbers, very large balance sheets, but they are in LLP format, partnership format, but they are in generally very large. And they may have large bank borrowings, there may be joint venture type of arrangements, joint development type of arrangements, very complex. So from that point of view, all this becomes very important. See, operating cycle is important because your current and non-current depends on that. So for example, if your operating cycle of the project is 5 years, and if you have taken a loan again on the project, and loan is also for a period of 5 years, so loan does not become long term. Loan also becomes current because it is part of the same operating cycle. Generally, our thinking is that loan liya hai, payable over a period of 5 years, first year is current, 4 year is non-current. That is the normal thinking, where there is a possibility of making an error, but the operating cycle is 5 years. तो लोन लेके जो प्रोजेक्ट किया है वो 5 साल में होने वाला है, तो वो लोन लेके जो मैंने इन्वेस्टमेंट किया है करंट एसेट्स, दैट इज करंट, बट द लायबिलिटी कैन नॉट बी लॉन्ग टर्म. Both have to match. If I've taken a money and spent on a project which is short, which is 5 years, then the loan is also current. So in those type of projects, we have to take extra care, especially current, non-current, and there will have to be now the note how the current and non-current classification is done, what are current assets, what are current liabilities, all these notes, all these disclosures will get added in your notes to account. So now your notes to accounts will not be 2 pages. It will be similar to companies where it will run into a lot of pages, some of these at least standard items. And from a practical implementation point of view, you should have standard template ready, so that spend 1 or 2 days, make a standard template and repeat that implementation. So that whenever your team is there on the working on the client, they know this is my firm's standard accounting policy. I have to follow this, except when there are variations which are required. Otherwise, these are my standard accounting policies. This is generally compliant with everything. So chances of mistake that much less. Because of the volume that we handle, it is very possible that mistakes happen because of the large volume. You may have 100, 200 tax audits, which you may be signing, large, small. How do you ensure everything is compliant? So narrative description to notes, cross-referencing becomes mandatory, uniformity in presenting amount. So if you are rounding off, then round off everywhere. If you are not rounding off, then don't round off everywhere. Do not use some places thousands, some places lakhs. Don't do that. Rounding off, we spoke about, there was a question also, it is optional. Requirement of the statute will prevail over the guidance note. So if a format is given or if there is a specific requirement in a statute, Society Act, Trust Act, Bombay Charitable Trust, they have different formats, they will still prevail over the format which is given by the institute. So another very important aspect. So this is what we did speak about, that standardization will happen between corporate and non-corporate. The differences are very insignificant, very less. So if you, for sake of simplicity, treat everything as one, that same format for companies, same format for everybody, just change the nomenclature, your life will be simple. There will be some exemptions which are available. But the overall in general, from a practical point of view, you can make life simple. There will be comparative figures which are mandatory. So if you are not giving comparative figures, start working on that. Additional disclosures which are there, which will align to Schedule 3. That is what we were talking for a couple of times. Balance sheet related changes, movement to be presented for capital and current. We saw that table earlier. So this is a mandatory thing. So additional contribution, withdrawal, interest, share of profit, terms, amount, everything has to be given. Nature of security is required to be disclosed for loan liability, including guarantee given by promoters and others. So if you have taken a loan which is guaranteed by the collateral given by the sole proprietor or their relatives or all those things, those disclosures will be required. They are mandatory. MSME related disclosures are also mandatory. So what is the interest payable to MSME, non-MSME outstanding? So that line is also there, because that is another area where disclosures were missing. Though I think there was some institute circular or guidance that MSME disclosures should be given. Aggregate amount of trade receivable more than 6 months, less than 6 months shall be presented separately. So trade receivable also more than 6 months, less than 6 months, you have to do separately. classification of secured loan, unsecured loan has to be done. Now, this classification also we have to be careful. What is secured? What is unsecured? What is the value of the security? What is the loan? Sometimes there are cases where the value of the security has reduced and the loan is higher, or for some other reason. Those type of unique situations do occur. So we need to take a care where these things are happening, because the investment based loans or gold based loans, as he rightly said, or some other reason where the security value of the security has dropped. So those cases we have to be careful. Related party disclosure, something which was not very common in all the non-corporate entities. So transactions with related parties, they will have to. In case of a non-corporate entities, this becomes a very big challenge, related parties, because there is no infrastructure or no system where you will be able to get some of this information so easily. Contingent liabilities, that is another mandatory disclosure. We all know it is required, but in many non-corporate, it was not being done. So if there are income tax orders, GST demands lying on Tracy's portal, all these aspects become important.
See, construction business, this kind of things.
Yeah, construction business, obviously they are there. But in many other cases also, because today we may not look at the outstanding demand on portal. There may be no disclosure that there is a demand which is there on portal of TDS or mismatch for various reasons, penalties, some notices may be there. Those notes may not be coming only. These are all additional steps, additional precautions which will have to be taken.
How is CME come to know what cases have been filed on the client if it does not give any information?
You may know 100%, it is not guaranteed, but from our side, did we ask right question? At least, did we do basic steps? At least we checked traces. We looked at GST portal.
In all that, I agree.
But at least you will ask questions, no? Civil cases, you should ask question and take it as a part of your representation. So from your side, you are safe that we asked. If somebody misrepresents to you, then at least to that extent you are safe. Yeah, it will safeguard you to some extent. But the point is that in your standard auditing processes, you will have to get some of these things. Some communication, some MR, because see, in a non-corporate entity, letter of representation can be practice. It is theoretically there, but how many cases it is there is a big question mark. How many cases those signed documents are available is a big question mark. Do we have a practice that balance sheet sign होने को जाता है तो letter of representation भी sign हो गया है?
One of my cases, no, I was not aware of the cases that the case has been filed on soil. But when I applied for the bank, no bank has come to know how the bank is coming to.
Bank maybe they may have been looking at some database, high court database वगैरह में देखा होगा उन्होंने if there is a case, or they may have done some private inquiry. They would have found out from the other areas. There will be you get indication from rents and taxes, you get indication from legal fees, and bank found out there could be that they may do a private investigation because before giving loans, they may have some processes. So they will be able to find out. CIBIL will only give about outstanding defaults, but you will not talk about litigation, no? Yeah, CIBIL also there litigation. I have not seen. Sorry. Yeah. So, but CIBIL access you don't get, no. CIBIL access maybe some banks have. Banks have CIBIL access. We don't have CIBIL access as chartered accountant. So for us, it is important to make inquiry. So if you have 4 or 5 page checklist, send that checklist to your client saying this is my questionnaire. This is what we discussed. Based on our discussion, there is nothing and this is what is going. So if positive representation nahi milta, to you do a negative representation. So that documentation will help you. Otherwise, those times some of these questions come back on chartered accountant. Investments, current, non-current, what are the terms of investment, market value, diminution, provisioning of diminution of investment. One area, another in a non-corporate entity is on investments. Provision for diminution and all those things people do not do. Now, but if you are classifying as current, market value has dropped. If you are classifying as non-current, there also this principles are relevant, applicable, and we need to follow. So if it is a joint venture, dot disclosure will have to be said whether it is a joint venture, not a joint venture. All those things, subsidiary, not subsidiary. It is quite possible LLP is a shareholder of a private limited company. So then it becomes whether it is a private limited company, is a subsidiary of LLP, not a subsidiary of LLP. It controls the shareholding, controls the composition of board of directors. So all those points are relevant. Classification of PP in intangible separate in notes at least. Goods in transit has to be disclosed separately. So all the relevant disclosures they are trying to bring there. But for the format and other things, they have not segregated between large and small. That they have made applicable to everybody, same. Only accounting standard applicability, there is MSME, non-MSME, but in this structure, there is no MSME, non-MSME. Hence, from a format and a disclosure point of view, it is applicable and relevant to everybody, even if you may be small. So that becomes a big difficulty because for very, very small entities also some of these disclosures are required. No, to the extent applicable you will do. So for example, there may not be some of the items which may be there. Some provisions may not be there. Cash basis of accounting. But to the extent applicable, you have to disclose. Disclosure of any item expenditure which exceeds 1% of revenue, 1 lakh. This is same as companies. Disclosure of revenue from operation, other operating revenue, COGS, all those partners remuneration, subclassification, finance, interest on members. So finance cost, what is the interest which is paid to members, what is interest which is paid to outsiders, interest to banks, those subclassification is also required. So this will briefly be covered on the format. We need to be very clear that this is as close to companies as possible. Maybe this cryptocurrency and some of the other 4 or 5 notes which are additionally there, they are not applicable here. Anyways, those Benami and all those things, that is there in some other slide which is subsequent. But generally, 90% of what is applicable to corporate is applicable to non-corporate now. So that is the basic headline which we should be aware about, and we need to make our clients aware about it.
Case of fixed estate, the cross block may not be available.
That will be a problem because we are just reducing every year the depreciation and take together the deal. So the loss, so how we deal with can be.
Simple answer है qualification डाल दो. Because ये figure नहीं मिलेगा कभी भी. ये figure कभी भी नहीं मिलेगा unless, yeah, of course. From going forward you can do it, but so what can happen is opening you may not be very clear.
Can we replace the opening and the cross block of opening at WDV of the last year like?
Difficult होगा, कैसे करोगे opening? वो difficult हो जाएगा. From where you will get those figures? See what applicably originally wrong हो रहा था. So how many years of mistake will you rectify? See, it was happening wrongly for many years. It was always wrong. Because accounts have to be always prepared as per accounting standard. But we conveniently prepared as per income tax requirement. We conveniently prepared as per income tax requirement because book depreciation, tax depreciation same फटाफट easy होता है. And fixed asset register कोई maintain करता नहीं. This is the reality.
So, are not available. How to tackle this issue? That is the main problem, right?
So
Because the format says gross block. You don't have the figure.
So you will not put, you will put in a different format, and then you will qualify saying that all the information which is required by ASN is not available and hence it is not disclosed. But that is the qualification which will be least harmful, and most of the client people may not have any problem with this type of issue, but you can have a qualification and at least that will protect your interest to a certain extent. And going forward, you can devise some system at least आगे से हुआ. That is still wrong. That is still wrong. But eventually, over a period of time, it may be corrected. At least old items materially निकल जाएगा.
29, something wrong, right?
You will still have that qualification. You will still have that qualification. But eventually, over a period of time, you can rectify it. और पुराना WDV में अगर आपको आइडेंटिफाई होता है, if the last 4-5 years of additions का अगर आप go back up to 4-5 years, last 5 years mostly in a small company or something, last 5 years का tax audit का addition आप अगर ले लो, उससे वर्क करो. And अगर उसके पहले का छोटा मोटा कुछ फिगर आता है and then you write it off just because if that anyway it's a book entry and then you do some hybrid system. Because this change is next to impossible in first year. So you will have to have a note definitely in the first year. And at least I have seen in many of the cases, at least we have had this practice of putting qualification where it is there. This cross block detail is not available. There is no other option.
We can do right back.
4 years, 5 years कितना करोगे ना? अभी ये 2 साल का implementation करने का है, तो practically how much you will do? Client का support नहीं होगा तो कितना करोगे?
Depreciation. For that many years, for that.
But sometimes it may be very difficult in time, effort, fees.
Effort is the.
Time, effort, and fees, all three have to be looked at. And it is a problem, you know what is there? The problem practically is that the client is going to say it is your problem. It is not my problem. So theoretically you can go as many years back as possible. It is not impossible, but at some point of time we have to take practical calls.
With the rate of depreciation to be applied.
Useful life. Useful life.
The IT depreciation and the depreciation will change.
Yes. It will change. It will never be same.
But you can have that IT depreciation and say this is my useful life.
You can still have, you can do that. But problem is that when you, in the IT depreciation format, when you sold the assets, you reduce the sales value from the WDV and you never maintain this gross block format. That is the bigger problem. The rate of depreciation aligning is not a problem. You can always check, now I have changed my rate of depreciation, I have changed the useful life, I have revised the useful life. That is, there are 4 or 5 other methods you can use. There can be some logic. But this gross block availability is a slightly bigger challenge practically.
You can say that WTV as of 1st March 24 is taken as gross block in case of asset acquired prior to that in the April.
That will depend on facts and circumstances of each case. So business कैसा है, वो assets कितने हैं, how old is the business? If the business has been acquired, चालू 5 साल से हुआ है, तो you may be able to backward. So multiple options are available. I am not saying what is right, what is wrong. Multiple are available, but nothing is perfect. Nothing is perfect. There will be some plus and minus in each of these. Theoretically, you can argue.
Get correct that the asset itself is not identified, but they are merged in the block.
Yeah. Yes. Because there is no fixed asset register. I said that at the start only. That itself is a challenge.
The depreciation because of the 2 years will not be compared.
It may not be compared.
So depreciation as per income tax, I can have it.
You can have it.
The disclosure is required.
You can have it. You have to say that income tax rates are equal to my useful life, which is okay. Which is okay. But when you sell the asset, you will have to compute the profit and loss on sale. That you will at least have to do.
And
Then at that point of time, automatically tax depreciation, book depreciation will be different.
Calculation.
There you will have day-wise calculation. Here you will have 6 months period depreciation calculation. So book depreciation, tax depreciation will keep on changing. Rate same use कर सकते हो. But day-wise calculation नहीं करेंगे.
Deferred tax का component आ जाएगा.
Automatically आ जाएगा. So efforts हैं. So the point is that there are efforts which will be there. And hence it is important to be aware about some of the smaller, finer problems which are going to be there. It does not get one fine day we say the format applicable है, चालू कर दो बन जाएगा. First year you will face some challenges. If it was not done for so many years, first year there will be some challenges. When you do first time, definitely there will be some challenges and you will have to improve over a period of time.
Recommended by ICA and WIRC also, and they are giving the same format. I think for 3-4 years back.
Yes, 2 years.
Yeah, but it was recommend, हाँ, but अभी mandatory कर दिया है ना इनको. Technical guide में था.
Start following that.
Many are following, but many are not following. Majority are not following. Majority are in fact not following because what happens, majority of the work is done in September only. So there is no time to change. There is no time to change. These are our problems which we have only created for ourselves when we have to only deal. Because it's a problem we have only created. Nobody else has created this problem.
Useful life and the original rate of buying.
Huh?
So you calculate of useful life of an asset.
Theoretically, yes.
How you can calculate.
So there are challenges. We have to take a practical call depending on the circumstances. So now we will go to the accounting standards part of this, applicability of accounting standards. So we saw the format, we saw the challenges around that format, and then now let us go to the accounting standard related part of it. Typically, accounting standards, you recognize, measure, treat, present, disclose. This is typically, these are the 5 things that you do: recognition, measurement, accounting, treatment, presentation, disclosure. Typically, this is what is required for any transaction which happens. Guidance note, if you started with level 1, initially it was level 1, 2, 3. Then companies became separately under Companies Act, MSME, non-MSME, large, that Companies Act, there is a separate notification. ICA had separate level 1, 2, 3. Then it became level 1, 2, 3, 4. Now it is MSME, non-MSME. MSME, non-MSME. Within MSME, micro and medium. Micro means level 3, 4. Medium means level 2. And level 1 previously is equal to large. So large entity, medium, micro. If you can look at it in this manner also. Large entities, all accounting standard applicable. All.
MSME will be as per the MSME definition or something?
250, there is a 250 crore criteria which is there. I think now the MSME definition is revised, so whether institute will revise this or not, I am not sure right now. So that may also, whether that is changing or not, and there is no new notification right now.
The 250 crore.
Turnover.
Will be applicable for the each year. Last 1 year.
No,
1 year.
from the year that we will cover. That we will cover. The transition we will cover. So that is getting covered in subsequent slide. We will wait for some time. So these are the broad criteria. Turnover for classification as micro, small, and medium. So MSME turnover should not exceed 250 crore. Borrowings should not exceed 50 crores. And it should not be listed, process of listing should not be NBFC, all those things are there, should not be holding subsidiary of non-MSME, and things are there. Then you can be MSME.
Only turnover and revenue criteria.
Turnover, borrowing.
And registered for.
ये हाँ नहीं तो वो MSME का registration separate. So now they earlier there also I think limit was 250, then they changed that limit there. So whether institute changes these limits or not is a different question. So turnover does not exceed 50 crore. Borrowings does not exceed 10 crore. Then you will not be medium, then you can be micro. So these are micro entities, level 3, level 4. Earlier, level 3, level 4 equal to micro. So this is the table which is there for applicability of accounting standard. As I said, large entities, everything applicable. For exemptions are there for medium and micro. That is the 2 areas where we need to be more careful about. Cash flow statements applicable to large entities. Not applicable to medium and micro. Big relief. Big relief. Sorry? Uh,
There are people doing the transaction to very large numbers, but the profit is very small, and we prepare for 2 into 9 into. So that is the people need to follow this system. Who puts out it.
yes. Yes. Events and contingencies occurring after balance sheet date, applicable to everybody, prior period, applicable to everybody, changes in accounting policies, construction contract, revenue recognition, applicable to everybody. No exemption, no nothing. Property, plant, equipment, large entities, fully applicable. Medium and small, disclosure exemptions are there. Because AS10 has many disclosure requirements. Disclosure, there are certain disclosure exemptions which are there, encourage disclosures and all those things they have given exemption, but nothing very significant from a practical point of view. AS11, again, disclosure related application. Measurement you still have to do, realignment and all those things have to be done. Government grant, no exemptions. Accounting for investments, no exemption. Very important because many MSME and everybody have investments, and the compliance of this standard, there are a lot of gaps because provision for diminution, market value, all those assessment are required. Even at smaller entity levels, the standard is fully applicable. Accounting for amalgamations to the extent applicable if required, but generally may have very few applications which may be happening if there is amalgamation between two LLPs or something, or some acquisition or other things. Employee benefits applicable, but there are certain disclosure exemptions. Plus, there is some exemption from following actuarial valuation. You can have some alternative method which is available for medium entities. So you can do some other method because if actuarial valuation involves cost, so there they have given. For measurement determination, they have given some exemption, but still you have to follow the accounting standards. So gratuity provision, leave provision, and all those things are still required. Borrowing cost, fully applicable, no exemptions. Segment reporting only applicable to large entities. For small entities, medium entities, micro entities, not applicable. Related party applicable to large and medium. Only for micro it is not applicable. So this is important to note. Related parties. Because many of the clients, smaller clients will fall into the medium bucket. Quite possible. It may have larger applicability, the medium bucket, from a practical standpoint of view. Because if it is a large entity, more than 250 crore, I am assuming it will also have some level of infrastructure, some accounting team. So you will have some level of support there. But medium and micro are very important from practical standpoint of view. Accounting for EPS, it is applicable to large entities, but even in non-corporate large entities, how EPS will be calculated, I was also surprised. हाँ? तो नंबर ऑफ यूनिट्स पे भी कर सकते हो ना. चैट जीपीटी में पूछा मैंने एक क्वेश्चन, तो वो ना नंबर ऑफ यूनिट्स पे करने का. But it says all accounting standards are applicable. So this is one area which is still subject matter of research. I will also research little bit more. While preparing the presentation, I realized that how is AS20 going to be applicable, because LLP का balance sheet इतना बना है, कभी EPS देखा नहीं आज तक. Never seen. But it says all accounting standards applicable. So earlier guidance note it was saying not applicable, but when the notification came, it says all accounting standard applicable. So whether there is some anomaly or not is a question mark. There seems to be some anomaly here, but this is some gray area. Consolidated financial statements applicable if required. So for example, if LLP is preparing consolidated financial statements, then it is there. And practically this situation sometimes does come where LLP is also required to prepare CFS. Because it may have a large subsidiary which may be there. It may be, it would have invested in a company where it is a full more than 51% shareholder, and you may want to consolidate for banking purposes, for any other purposes, because it may be relevant. Taxes on income, there are exemptions, especially here, medium and small, there is an exemption on deferred tax calculation. So that is a very important exemption. Accounting for investment in associates, again, similar to consolidation, it goes hand in hand. Discontinuing operations only applicable to large entities. Interim applicable if required. So if you are going to present half yearly accounts for a sole proprietorship for banking purposes, interim financial statement is applicable. Intangible assets applicable, there are disclosure exempt. Financial reporting of interest in joint venture similar to consolidation. Impairment of assets applicable to medium as well as large, not applicable to micro. For medium, there are certain disclosures, and also they are saying practically if you do not do value in use, discounting and all those things, you can take a simpler approach here. Discounting and all those things. Large complex calculations you need not do. You can do a simplified approach here, but principles of the standard do apply. AS 29, provisions, contingent liabilities, contingent assets, standard is applicable. There are disclosure exemptions available. So this is the summarized way. If you look at that these are the standards which are applicable to which type of entities, which category of entities. We will go into some of the items, where there are we will come to that. There is one slide. Just hold on. Ind AS. Ind AS is there and it is interesting. AS 10, para 87 related encouraged disclosures. There are some exemption requirements. Previously, there were no exemptions to level 2, but level 2 also have some of the exemptions, but practically these are encouraged disclosures. So in a general sense, it may not really impact day-to-day practice. AS 11 also, there are encouraged disclosures which you can not, which you don't do is okay. Anyway, they were encouraged. So again, from in my view, practicality point of view, really does not make a great difference. This exemption is not going to make any great difference. AS 15 important. So one is, these are the exempted paragraphs relating to short-term accumulating compensated, which are non-vesting. Discounting not required for contributions to defined contribution plan, which fall due for more than. So discounting is not required. Their discounting was required for large entities. Standard does require discounting. Para 50 to 123 and 129 were measurement and recognition principles. Presentation is in respect of accounting or defined benefit plans and long-term plans. Entities may calculate accrued liability under defined benefit plans by reference to some other rational method. So actually, instead of actuarial method, you have an option of some other rational method. So you may do some other simple method and do not go for actuarial valuation. That benefit was available only for entities which were less than 50 earlier. Now it is available to everybody. This is a significant change. Significant benefit which is available, but still more importantly, provision for this actuarial gratuity, long-term leave, long-term benefits have to be made. That is a common mistake. Many accounts still have that management has not made provision for actuarial valuation, gratuity and all those things, and they are reported as accounting policies and all those things, or they are reported as emphasis of matter and all those things. These are all wrong practices. If provision is not made, there is a necessity to do qualification. No, there is a standard audit report for everybody. Either SA 700 is there, SA 800 is there for special purpose. Even that has to be ideally used. Even if you are not using that, there is correct. So tax audit. There are two-way methods in which people do. They also prepare SA 700 report even in case of non-corporate entities. There are some firms who follow that practice theoretically. And some people are not following that and they only do 3CB report. If you look at the format of 3CB report, there are two parts in that. First part is that we have audited the balance sheet and this is there. Then in that case, whatever your observations are there, you have to insert there. So there you will have to insert those qualifications. Because even if you read the guidance note on tax audit, it gives reference to SA 700. The disclosures of management responsibility, auditor's responsibility, etc. are applicable to the tax audit report as well. So that you will have to even bring in your 3CB report also. 3CB report, 3CA report also. Auditor's responsibility, management responsibility, and all those paragraphs are also required. So similarly, that qualification structure will come here also. So there are standard format. It is not that there is no standard format. Leases, again, disclosure related exemptions are there. Accounting for taxes on income, I said that only MSME must comply AS 22 only for current tax, following its definition, para 4.4 presentation disclosure. On availing this exemption for the first time, any deferred tax asset liability of the previous financial year should be adjusted against opening reserve or owner's fund in the current period. So if you have done in the past and you have now decided to take the exemption, then write off any asset liability which is created. So deferred tax, again, because calculation point of view, it sometimes becomes little complex. This is a very important exemption if people want to avail. Sorry. On intangible assets, disclosure related exemptions, but principles remain same on in capitalization of intangible assets. The economic benefits, control test, and all those things you have to follow. If there are any intangible assets, recognition is there. My impairment of assets, micro entities are exempt. For medium, the valuation of measure value in use, you can use a reasonable estimate and do not go for external testing and valuation reports and all those things. You can have a relaxed, slightly practical approach to determine value in use. AS 29, the movement of provisions, detailed disclosures are not required. Otherwise, principles still apply. You need to comply. Some of these standards I'm repeating because a lot of times errors keep on happening here. We under the impression that इसमें applicable नहीं होता है. AS 13 fully applicable. Earlier there were certain exemptions, and this standard on discontinuing operations we spoke about earlier. Only large entities applicable. For other entities, medium and micro, it is exempt. The transition, there was one question, what happens? So MSME to non-MSME, there is no need to revise previous year figure. So if you are transiting to MSME in this year, no need to revise. Previous year figures are revised, you should give all those disclosures. If you are transiting from non-MSME to MSME, that is a difficult transition. For 2 years, you still need to be non-MSME before you can transit. So immediately you cannot transit to a smaller level. So when you want to come down, you need to be at the lower level for 2 years. Then only you can transit. So that is something which is important. Whenever you prepare the balance sheet, you will have to very, very clearly mention that you are small, micro, MSME, micro, whatever exemption benefits you are taking. So that is very important. It is not that it is applicable, but you have to disclose to the reader of the financial statement that we are taking these exemptions. These are the benefits which have been taken. It cannot be just silently done and say it can applicable nahi hai. No. So there has to be application of mind. There has to be a proper disclosure before you can take some of these benefits. So in the draft standard notes that you prepare, you should have that paragraphs drafted well in advance, that if you are going to prepare for a medium entity, you will have to say that the company, the firm or the entity is a medium sized entity, and we have opted to take these disclosures. Those standard drafts should be ready so that they can be incorporated wherever required. So that this, again, all these small things does save a lot of time at the end when you have to finalize many things together. So prepare the standard drafts, prepare the standard notes, keep everything ready, and then implement it as and when you have to do it. Because when you do many accounts at the end of August, September, October, this becomes very, very difficult. That is what I was saying. Mandatory note in the financial statements, change in accounting policy. So in case there is a movement from MSME, non-MSME, whatever changes are happening, those disclosures. As I said, checklist is very, very important. What is applicable, what is not applicable, because these things keep on changing. How do you look at applicability, all those things? Create a checklist, create a template that will make your life much more simpler. You can share this in advance with your team. This can be shared in advance with the client, that these are my requirements, these are my standard checklists, these are my standard checkpoints. Whatever 5, 10, 20, 30% it helps, it helps. Some of the common issues which are there when we do the work in a non-corporate area, these are some of the issues. We will try to see if there are some solutions around it. But if you are aware about the problem, 50% of the problem is solved. If you are aware about the problem, 50%, because then you will do something about it. Many times the problem is that we are not aware about that this is a problem. Oh, wow. Wow. ये कर रहा हूँ। Yeah. So we look at the common. ये दो ऊपर का. So we look at some of the common issues. Inadequate disclosure of contingent liabilities commitments. This is a common issue, common error, common mistake, whatever we say. Because sometimes availability of data, sometimes not questioning, doing it on the last moment. These things do get missed out. Related party transaction. Now, even for a medium-sized entity, it is applicable. How do you identify what process you want to follow? What management representation note you should have? What questionnaire you need to send to your client? How will you identify who are the relatives? आपका नाम सबका नाम तो नहीं. In companies act, there is still some method that there are disclosure of interest given by directors, promoters. There is some method. In a proprietary firm, which is a large proprietary firm, you may not have so many methods to do that. In a large partnership firm, how do you know what are the relatives of the partners? Who are the other firms in which they are partners? There are no standard declarations which are available. So you will have to get those documents. You have to ask that much more questions. And related party transactions are becoming more and more important, because any fraud, anything which is happening, everything is there through related party only. And hence it becomes very, very important. Not for micro, yes. Classification of current, non-current, we are going to be another common issue which will be faced. What is current, what is non-current, definition of current, non-current, what interpretations can be taken there. Depreciation computed using income tax method, I think we discussed a lot about that. That is a very, very common issue, and we need to get out of that. But if you are aware, at least you put some note, at least your liability will be protected. Disclosure of debit balance in partner's capital account. Many times it was presented as current assets, but now it is very, very clear that it has to go from the owner's fund. And this will significantly change how the balance sheet of the firm is being looked at. Because if the owner's fund is negative because of the excess withdrawal, how will the bank look at it? You just think from that point of view also. So when you reclassify a debit balance in current account from current asset to owner's fund debit balance. It will significantly change way outsiders are looking at that balance sheet. It is very, very clear that partners have withdrawn more than what they were entitled to withdraw or more than the profit which they were entitled to withdraw. Or partners have taken money out of the firm. Now, whether when you go for a bank loan, is bank going to be comfortable giving loan on this is going to be a question mark. So just a small change in presentation makes a very big difference. Minutes of meeting of partners, whether documented, not documented. Another very, very critical area where you have to finalize the balance sheet, because this is one area where you need to take care. If there are 4 partners, 5 partners, if the balance sheet is signed only by one partner, is it acceptable practice? But still we accept it. Is it an acceptable practice? Why should all 4 partners not sign before we sign? Because if in case of dispute between those partners, they will drag us. Are the decisions of partners documented, minuted? If a loan is being taken and a resolution of partners meeting is given to the bank, how many such resolutions are given? How many such resolutions are made? Nobody knows. So these are some of the practical aspects where as auditor we need to be careful. Otherwise the risk does flow back to us. At least on some of the critical matters, we need to take more care, more precaution. At least minimum 2 partners, 3 partners, or all designated partners should sign before we sign. Those basic hygiene principles should be applied. Otherwise, it becomes little challenging. Sometimes that it will just expose you to risk, because in companies there is a mandatory requirement of 2 directors signing, MD signing, all those things. But that same requirements are mandatorily not there in non-corporate. So if you are signing a balance sheet of trust, do you have the resolution that body of the trust has adopted these accounts? Those copy of the resolution should be there with you. Who is authorized to sign by the trust, whether he is signing, not signing. All those are important aspects, important items which should be taken care of. Accounting for deferred taxes. Now there is a lot of exemption which is there, but even in level 1 non-corporate entity, deferred tax calculation is a challenge. Even in corporate, there are a lot of errors which are happening in deferred tax calculation, and we need to be careful. We need to be aware that whether my deferred tax calculation is correct, whether my tax rate reconciliation is happening, not happening, what are the components of deferred tax, whether it is correctly computed. So those challenges and those questions, we should take a lot of care. Employee benefits liability is not provided for. Many non-corporate, we have seen this matter that it is not provided for. Sometimes people say gratuity act is not applicable because it is less than 10. But practically, if you are going to give him something, practically if some compensation is going to be paid, then still it may be applicable commercially. So you have to look at it both ways. Accounting policy is not getting disclosed. This is a very common problem. The accounting policies are not get disclosed. You write only 3-4 lines in accounting policy, revenue recognition, some write about fixed assets. But what about, there are so many line items in the balance sheet. Is the complete disclosure of accounting policies made? Not made. Which are you giving, which you are not giving? There needs to be some thought which is applied to this based on the business of the entity, based on the business of the sole proprietor. Impairment of trade receivables, impairment of investments. People take up a position, maybe small entity hai, chalega. Even if the provisions are not made, if there are old debts, as an auditor, you need to have some documentation. You need to have some discussion around it. Maybe if you raise the right question at the right time, it is value addition to a client. If you raise the right question at the wrong time, it is not value addition to the client. So if you raise the question in September, it is not value addition. But if you have the question as a regular conversation, it may be a value addition, because where the events are live. And at that point of time, if you are asking this question, it may be more of a value addition. Direct debit to capital account. Sometimes there are expenses which may get debited to capital account. There are practices where provision for tax is debited to capital account. So that again is not a right practice. It has to go through P&L account. This is a common practice which is followed in many entities, that we can directly debit it to partner's capital account. Or there is a prior period item, we can directly debit it to capital account. That is another practice which is there. that maybe from an income tax point of view, it is better because it will not be noticed. It is debited to capital account, matter is over, and you don't do disallowance in the computation, and it may not be apparent as an error. But that may be difficult if you have to fully comply. PF ESIC non-compliance is another area which we need to be aware, especially non-corporates. Many times they are applicable but not getting complied. Personal expense is another big issue in terms of what is debited to non-corporate entities P&L account. There are practical challenges, but as an auditor, how much is possible, how much is not possible, you will have to see what is justifiable, what is not justifiable, what are the documents around it, what hygiene needs to be maintained. Everything is very, very important. And again, creating awareness, raising the right question at the right time is very important. Gifts, loans, documentation, if there are gifts, all those type of transactions, what are the paperwork around that? That is another big question. Cash expenses, control, vouchers, disallowances, their timely accounting is another common issue which is generally faced. We will look at cash base of accounting. We will also look at Ind AS. So there is a technical guide by the institute on the cash base of accounting. So there is a general question that whether accounting standard is applicable to cash base of accounting or not. The answer is that it is applicable to the extent relevant to the method of accounting followed. It is applicable to the extent of method of accounting followed. So if you are following cash base of accounting, yes, you still follow because maybe under the Act there are no guidelines. And many entities still follow cash base of accounting. There are some cases still there. So the first point is on applicability of accounting standards. Disclosure of accounting standard policies. Again, it is mandatory that you are following cash base of accounting. That disclosure should be definitely made. Very, very important. Because the fundamental accounting principle of accrual is not getting followed. Revenue recognition, it is based on the cash received, cash paid. But then there is another guidance that if the TDS has been deducted, then you can account for revenue to the extent of TDS deducted because that is cash received in a way. So that is a clear guidelines. Here also there are inconsistent practices which are followed. Government grants as and when you receive, but disclosures of what are the grants and what are the obligations and all those things, they are supposed to be made. So even if you follow cash based accounting, there are a lot of disclosures still you may have to give. Employee benefits as and when you pay. But the information about what are the employee benefits, what are the things, those type of disclosure you still need to give. Borrowing cost as and when you pay, principles of capitalization, all those things applicable. Lease accounting, finance lease, operating lease as and when you pay, those things will be applicable. Non-cash expenses. Sometimes there is a question, cash based accounting, whether depreciation should be provided, whether impairment should be provided in cash based accounting. It very clearly says it is applicable. You have to provide for depreciation. You have to provide for impairment. So in a cash based accounting, you have investments. Then can you provide for diminution in value of investment in cash based accounting? Yes, you can. You need to. Yeah, it is required. Now we will finish it. Taxes paid are expenses, but if you have paid excess tax, then what you are required to, then you can create an asset. That is also mentioned in the guidance note. Sorry, the technical guide on cash based of accounting. So if you are required to pay 100 rupees tax and you have paid 120, and if you are certain that 20 refund will come, then you can create an asset out of it. This is another where we do not look into. Everything what is paid is accounted as an expense, even if it is paid excess. Liabilities, normally same principles. Assets, same principle. Inventory valuation, you will do cash inventory. So whatever is physically available out of that for which cash is paid, that is valued. But the principle of cost versus NRV applies even in cash based of accounting. So if the NRV is lower, you need to do the valuation at cost or NRV, whichever is lower. So it is not that since I'm following cash based accounting, I did not do the cost versus NRV and all those principles are not applicable. No, they are still applicable. Even in cash based accounting, if you are label one entity, cash flow is applicable. Cash flows, obviously, there are a lot of issues, MSME, non-MSME, gross disclosures of loans, exchange gain losses, realized, unrealized, there is separate disclosures. Non-cash items have to be excluded. Direct tax paid in the cash flow versus direct tax paid as per the P&L account and other things, those reconciliations do not happen. Segregation between operating, finance, and other activities, there are a lot of errors which are happening there, especially if it is NBFC and all those things. So cash flow, you will have tax paid, one figure will be there. Tax paid. So whatever tax paid figure is there in the cash flow statement. In the books, you may have a provision for tax. Whether those two figures reconcile, talk to each other. So you may have provision for tax of 100 rupees, but you may have paid 120 rupees as a tax paid, or there may be some refund. So you have to just reconcile that to ensure that there is a completeness and there is no error. This is from an cross-check point of view. Applicability of Ind AS to non-corporate. Now, prima facie it may not be applicable, but if the LLP or a non-corporate, or I have seen cases where AOP is a subsidiary of a company to whom Ind AS applies, or associate or joint venture, then they have to prepare Ind AS accounts. Now, there are two school of thoughts which are practiced. One is that you do not change the method of accounting, and there are fit for consolidation account which is given only for consolidation purposes, and for income tax you still prepare accounts which are not as per Ind AS. So then in those cases you have to prepare two sets of accounts. One which is given for consolidation to your holding company, one which is given to income tax department. This is your statutory accounts. So those two accounts have to be prepared separately, and you will have to mention in both the accounts that there are two sets of accounts which are getting prepared. One is for consolidation, fit for consolidation accounts for my consolidation purposes, and secondly is for income tax. There are some firms which have said that Ind AS accounts which are given that are only my final accounts. That is only based on which I will prepare my income tax return, and I will do whatever, because two books of accounts and all those things becomes very cumbersome. Maintaining two statement of accounts, two balance sheets, two profit and loss accounts, reconciliation, what is done in Ind AS, what is not done in Ind AS becomes very complicated from a practical point of view. So this also becomes an area where if you are a subsidiary of a listed entity, then this becomes relevant.
It's a holding entity.
The holding entity, then it's not a problem, because you are not required to prepare. You are not required to prepare. And the MCA circular governs Ind AS. So you are not covered by MCA circular. Then the problem is, if you want to prepare consolidation accounts, then your listed entity will have to prepare two sets of accounts. One Ind AS and one non-Ind AS, which is still happening in some NBFC companies. It is still happening in some NBFC companies who are less than 250 crore and to whom Ind AS is still not applied. There this practical problem happens, because if the subsidiary is an Ind AS entity, holding company is a non-Ind AS entity, because NBFCs are there where you cannot voluntarily adopt Ind AS. You have to wait for the criteria to apply, and there you have this big problem. Even in banks sometimes. There all these cases, the listed entity may have to prepare two sets of accounts. So this becomes an area where some care has to be taken, especially LLP structure, partnership structure, or sometimes even I have seen AOP structures are quite common in large conglomerates, especially on the real estate, infra, and all those areas. They are quite common that you may have LLPs below a large holding company. And in those cases, some of the accounting standards, disclosure, notes, everything becomes very, very important. Some of the continued realizations which are there, reserves earmarked, continuing default, this disclosure is not required. virtual currency and all those things which we said. Financial ratio is one small exemption which is not required. But these are not very large, significant, or something which bothers stock of companies and all those things. There is no audit trail. There are some relaxations to related party for loans given, taken, and all those things, the limits and all those things. These are all still not there. LLP also has no law. Partnership firms are also no law. Mandatory internal audit is not there for the time being. The recent developments, which I said, NAFRA has finalized and recommended auditing standards to central government. So they want to make auditing standards mandatory, similar to their, which is there in the Companies Act. So once the auditing standards become mandatory, then as an auditor, also your obligations will substantially increase. Institute has an exposure draft which is open for public comments of 40 standards where they have made changes which are relevant for LLPs especially, because LLP has become a large area of focus because it is a body corporate and there are large LLPs which are coming into picture. So there is a lot of focus now, especially on the LLP side of it. Audit purpose, you have to follow SA 800. If it is SA 700 is there, which is there for any regulatory purpose or anything, SA 800 for any special purpose. So SA 700 and SA 800, depending on the nature of engagement, you will have to decide what is applicable to you. But the formats are there. Formats are very well prescribed. So ICAI has prescribed the formats. It is not that there are no formats. There is a lot of literature. There is a lot of formats which are available, but sometimes not implemented. No, cargo is not applicable. Then you have to explain to banks. But the audit report format, your opinion format, that you follow SA 700 or SA 800, more or less structure is similar. Basis of opinion, management responsibility, auditor's responsibility. So once you use that format, the bank will know I कुछ जाना पहचाना है. But because the thing is that a lot of things, certifications and reports are issued to bankers, and that becomes very relevant. So that is an area of concern from a regulator point of view, from a banking point of view. Whatever certifications, whatever reports, whatever accounts which are getting certified for bank finance purposes, for loan purposes, this becomes very important. There, our responsibility is even greater because public money is getting used. And hence becomes more important that some of the institute guidelines are clearly formulated, implemented by us. I think we can conclude. Time is also there, but this is the most of the things I have already covered. Formats to be shared. These are some of the tips which are there in case of special purpose, financial for tax purpose. So that is what I am saying. If some of the clients are not making some of the disclosures, then you put a remark. And there is no other way you can escape out of it. Some of the benefits which will be there, obviously we'll have to market it a little better. That why this standardization is required, why this effort is required, what will be the benefit of this. That is very important. Obviously, compliance burden is going to go up. There is going to be increase in cost. There should be increase in fees. We should ensure it happens because as a fraternity, that is very important. Otherwise, the compliances we will not be able to ensure. And once you raise the awareness, there will be discipline from the other side also. That why it is important. These are some of the benefits which will be there. There may be some accounting softwares which may require some changes so that data is easily available, especially the larger entities between who are, see, important is entities who are currently in medium but have aspiration to be large. Those are the type of people who will want to follow this. Because if I have a large aspiration wanting to grow further, then I will follow it. And I will not have that much resistance. So now we can have any other questions if there are. Time hai questions?
How much compliant can a secretary record?
Secretarial
First.
for companies, non-companies. Non-companies secretarial records, as I said, if you are having LLP, then minutes of meeting of LLP is important from various perspectives. So, because it is the relationship between the partners, adoption of accounts, critical decisions which have been documented. The LLP deed also may have clauses which we generally don't read and we mostly ignore, that minutes will be maintained and all those things. So if there are disputes between the partners, then all those things start getting questioned, that minutes of meetings are not there, all these decisions are invalid. The designated partner took the loan without consulting other partners. This is a fraud on the other partners. Auditor did not check the minutes of the meeting. Who approved the loan transaction? When those questions come in a court of law, how do you handle those questions? For partnership firms also, if the partnership deed requires you to maintain some of the minutes, then it is mandatory. Otherwise, it may not be mandatory. And hence it becomes a very gray area. How do you handle that? As I said, signing of balance sheet by two partners, all designated partners, or all partners sometimes may also be very, very relevant depending on the type, relationship, nature, who is controlling, who is not controlling. Those judgment you will have to take based on each client. When you interact with the client, what is your client KYC? What is your understanding about the client? And the relationship with the client, based on that, you'll have to take some of those decisions.
Safer side, we have to take the sign of all partners, if possible.
If possible, or a resolution saying partners have adopted the accounts. All partners have adopted these accounts in their partners meeting in presence of the majority of the partners. At least that resolution should be there, or critical partners holding majority of the share, if those are signing or something of that. So some precaution has to be taken. Something should be there. It is always better.
Thank you, sir.
Thank you.
Thank you, Prashant sir, for that insightful and enriching session. And sorry, friend,
Wait for some time.
please. Friend, एक आप लोगों से रिक्वेस्ट है, we are sending in a registration form for every meeting. और रजिस्ट्रेशन फॉर्म भर के काफी मेंबरों का नहीं आता है, तो उसके कारण से हमें यहाँ पर ऑर्गेनाइज करने में डिफिकल्टी हो जाती है कि हम कितने मिनिमम गारंटी दें जिससे हमारा वेस्ट भी नहीं जाए. So I request everyone to please register before the meeting so that we can organize in way our valuable money will not be lost and suitable sitting arrangement will be there. For forward vote of thanks, I request Sri Mandeep Singh Talwar to give a forward vote of thanks.
Sir, it has to be some in time, so we say that at least we members are going on cutting and something. का माहौल खराब हो जाता है, स्पीकर को बोलना है बीच में तारतम्य टूट जाता है. We have to bring the chairs out आगे. Please come in time.
Good morning, everybody. It is my privilege to deliver the vote of thanks at the conclusion of today's enlightening lecture on finalization of accounts for non-corporate entities, including the accounting standards applicable to them. On behalf of JB Nagar CPE Study Circle, I extend our sincere gratitude to CA Prashant for sharing his valuable knowledge and insight with us. The session was not only informative, but also highly practical, especially in today's context, when financial reporting and compliance have become increasingly significant, and even for non-corporate entities. The discussion on the classification of non-corporate entity into MSME and large entities and their correlation with level 1, level 2, level 3, and the tailored applicability of the accounting standard as per ICAI guidelines was practically beneficial. Understanding the nuanced applications such as exemptions from certain disclosures for the MSME and clarity added clarity to the process of finalization of accounts in line with current regulatory requirements. I would like to thank our faculty member, organizers, and all the participants who made the event successful with their active engagement and thoughtful questions. Once again, thank you, CA Prashant, for time and for delivering such an impactful session. We hope to have many more opportunities to learn from your experience in the future. With this, everybody join me with a loud applause.